It's very clear we've seen a lot of concessions on the Chinese side. They're clearly eager to have a deal. It sounds to me like poor Xi Jinping ran into a brick wall when Liu He came back with discussions on the latest talks in Washington. And the sticking point seems to be that China shifted from changing its legal structure to trying to change its regulations, which the Washington does not like because that's less fixed in stone. So, but the markets are shrugging it off for the simple reason that China is clearly eager to see a deal, and there's been ongoing talks for several months. So I expect this to be resolved, although it may be iffy from now on.
You expect this to be resolved, Andrew. Are you saying that you expect the president to back down?
Well, the issue, if the sticking point is indeed the regulatory question, they will have to resolve that. And I'm sure what happened is Liu He went back to Beijing and said, look, we've got to change our constitution or our laws to reflect IP protection, which I think is the issue. And obviously the Ministry of Finance and others within the bureaucracy push back on that because that's a major change. So they're going to have to come to some concession on that. And China maybe will change maybe one law and then leave some regulations in place.
And that's it? You think that would be enough? Because it seems like for now that the U.S. wants to negotiate the deal on their terms.
No, what I read is that actually Mnuchin said that 90% of the deal has been negotiated. So it looks like they're basically almost there. And he made that statement a couple of days ago. So I do think that they're pretty close. It's just that China seems to have backtracked because of internal dissent in China. Now, that's based upon press reports both from China and Washington, so it sounds accurate.
And so what would that mean for the markets going forward from here? Do you think that this risk is perhaps something that the markets may not have to contest for in the very near term? What would be your market positioning currently?
Well, it's very hard to tell at this point. I mean, you have to be defensive until you know what the outcome is. But it looks like that if the talks are delayed, then that is obviously going to be negative for the markets, and we'll know more later this week. However, the assumption among most investors that I work with is that there's going to be a resolution to this. And so far, the U.S. economy has shrugged this off. They've done very well. You've had 3.5% increase in wage growth. You've had strong GDP numbers above expectations. So far, the markets are saying, well, you know, maybe this isn't such a big deal after all.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.